Hey traders, it's Mark here from Trade and Train. It's Thursday afternoon, coming in just before 6 p.m. I just want to run through the markets, and apologies that I've not done any videos for a while. I've been in preparation for a competition that took place last weekend. What I can say is now we're back on full steam ahead, so videos will be coming through regularly. Focus here is on the dollar index, and I know the markets are literally trying to push you out of any potential trades or trick you into opportunities that I don't feel really are there. I see the US dollar as overvalued, and I'm looking at shorting opportunities. And when we look across the board, I think the markets have, or market makers have tried to basically trick everyone into continuing with this dollar bull move, spiking you in or out of moves. So let's take a look at the dollar index, and you can see here on the 4-hour chart we've got clear resistance up at the 98.2, 98.3. Last time it came in, we got this false break above and then a key reversal candle on the 4-hour. Now if we look at what happened previously on the 4-hour candle, we got that big momentum move into the same structure point. Basically at this point, if you look at all the other majors, I'll show you some key levels that got penetrated and broken through, trying to trick those breakout traders into taking those moves. And then what did we see? We've seen the market stop and reverse. So I'm anticipating now that we'll at least see the dollar index come back down to 97.6 and then potentially even further. 97.6 will correlate to about a 128.8 level on cable. We'll show you that in a moment. So this is the 24th of May, and we'll show you how this could potentially play out. And if we look at dollar yen as well, that could provide a really nice opportunity then to trade the cross pair pound yen. So let's take a look at that one in a moment. So moving on to euro dollar, this is what we're talking about, the 1.130. If we look left, we can see structure, big spike through and come back up, big spike through and come back up. And then for the last day and a half, you see here the market has literally been trying to close, and then buyers came in, trying to close below, buyers came in, and then today the market's pushed right through that level, trying to trick those breakout traders into the market. It's done the job, and now we've pulled back up. And if we close back above this level, this is a long market up to 1.12 as a minimum, and that'll correlate again with that May 24 low that I just showed you on the dollar index. So if you're not long euro now, I'd definitely be looking at getting long. Multiple ways you can do: buy stop above the high of this candle. You could look at these tips of wicks here, wait for a close above, and then drop down the time frame, look at a potential pullback into this structure point here, and then trade that long back up to 1.12, and that'll give you a nice, what's there, about 60 odd points. I think we got 64 points, 65 points. If you can get that on the hourly chart, it's going to be a really handsome risk to reward trade there. So looking for longs here, but my pick is going to be on cable. Cable is the market that's been hammered. You can see here right now this market has been in pretty much free fall since the 3rd of May. We got a measured move from down here to here, where it's come straight back into these lows here around 126. Potential double bottom formed. Now there's going to be a slight maybe argument from people that watch this video and say it's not a double bottom because we've got a lower low. Well, it depends how you create your rules and decide what a double bottom is. So for example, the way I would look at a double bottom is it can have a lower low but can't close below this low. If it closes below this low, then we do have a lower low. If not, then this to me is a false break, and I'll be looking to trade this long. So that's how I'll define a double bottom, if that helps you guys. So essentially we're looking at longs from here, going to be pretty risk averse and trade it within the double bottom neckline. But then if we want to then say, right, if the market breaks the double bottom neckline, where's it likely to go? Well, if we do the measured move, so for example, we look at the neckline, we go down to the low, we're looking for that measured move, so we just copy this little movement here and we'll put it on top. And if we look left, We drop our horizontal in, you'll see the measured move comes in perfectly at that cycle low, which 128.90 to 129 even handle. But also if we then bring in our fibs and we go from, well, we've now got a new low with the false break, you'll see that the 50% retracement is just a little bit lower. Off the previous low before today's move, the 50% retracement was bang on that measured move. So we've got our zone there that we're looking to trade into, which is about 128.80 up to 129. Offers fantastic risk to reward if you're an end of day trader. Buy stops above today's highs, candle providing it closes above this low. If you like to trade on the smaller time frames, then I'd be looking either at a buy stop on this 4-hourly candle or look for a change of cyclical pattern, which would be a move through these highs here and then looking for it to pull back, retest and go long. First target's in this area here. So very similar sort of trading opportunities to what I just showed you on the euro. Now if we look at dollar yen has got something very similar in the sense that you've got your double bottom. Now if pound's got a double bottom or cable's got a double bottom and yen's got a double bottom, and they're both potentially going to run up to this point, you might as well trade the cross pair and get rid of the common denominator, i.e. the yen. So that would mean looking at pound yen. So if we just take a quick look at this, you can see how this market has been absolutely slaughtered with the yen's strength based on a risk off sentiment and money flow moving into Japanese yen, and also with the pound getting slaughtered with Brexit woes and all the shenanigans that goes along with that. Now what do we see? We've seen the market come down, form a lovely hammer. Now we've got a doji, and essentially you're going to look at first targets in towards that 139.60 and then extended targets up to 143.75. Now let's just zoom out a little bit on the daily chart. You'll see that price has come into this little low here, these structure points where we can see all these bodies of candles. So expect to see price potentially pull back up into this point, which will correlate lovely with cable moving up into that neckline. And if we do break through the neckline, your next stop's probably going to be around 142 and then up towards 144. So lots of pips up for grabs here on pound yen. Other market of interest is Canadian dollar. We're seeing a lot of strength potentially about to come into Canadian dollar. We saw that false break yesterday. What was interesting was the rate statement from Bank of Canada was relatively positive, but yet the market sold off significantly with dollar CAD pushing up to these highs. Now what that's done is that's triggered a lot of long traders into the market based on this structure point here being potentially invalidated, triggered all those longs in, and then boom, it's just spun straight back round. What would have been crystal clear was if we'd have closed above this high, which we failed to do so. And now we're looking at a potential reversal pattern forming here, and we'll be looking to see if this market is going to roll over with sort of first targets of 134.05, so just under 100 points. Now how can we look at trading that on a smaller time frame? Well, there's a bit of a head and shoulders setting up here. Remember, these patterns are never the cleanest. They're never how textbooks like to show them, because people only ever like to show the ones that are absolutely crystal clear. But head and shoulders, all it is a change in cyclical pattern. So if we look how the market creates, I'll just draw it on. So market comes up, creates a high, higher low, higher high, higher low, higher high, and it comes back down, same low, potentially lower high. If we break through this low point here, then the head and shoulders is completed, and we can look to use either price action at this point or sell limits, and then depending how aggressive you are, you can put stops here or here. And that's pretty much about it. I'll show you CAD yen as well, because we're looking obviously at buying CAD and selling yen with the risk off sentiment. Again, we've got a double bottom scenario here. We've got an end of day candle that you can see set up very nice for those traders, but there's also a level here around 81.60, which if you are a little bit more conservative, you can wait for the market to pierce that level and then trade breakout retest and back up towards 82.50, taking first take profits. Right guys, that's it from our video today. If you did like the information and the way it's being delivered, please make sure you hit like and share it with any other fellow traders. Alternatively, if you've got any questions that you'd like answering regarding any particular charts, post that in the comments section below. And for those of you that are new traders or experienced traders but not getting the results that you want, or would like a little bit more assistance in getting that consistency, why don't you register? We are holding our first 2-day live course in London in September. Spaces are limited, and I've already had 25% of the room filled by people that are on a waiting list. If you do want to attend, you're going to have to send me an email to mark@tradeandtrain.com. I'll put it in the comments section below. Dates will be the 21st and 22nd of September. Spaces are limited, and we look forward to seeing you there. Okay guys, have a great trading day. What's left, be good tomorrow. Don't give away any of your hard-earned profits, and we'll see you next week. Bye bye.